particular part of the question related more to a specific accounting standard rather than general accounting treatment. A large order of timber and thatch that was received at the end of January, thus before year-end, was still on hand at year-end. About a week after year-end, a security guard accidentally set fire to it. Our after year-end gives us our time frame, which indicates that we're dealing with an event that took place after balance sheet date. The fire was contained. Staff managed to restrict the fire to prevent further damage. Both the timber and thatch were damaged beyond use. Wasn't insured. Security guard was fired. Roy has written the value of both off in the year-end figures. Obviously, when I'm auditing, I'm concerned about the fair presentation of those figures. So definitely the effect on the financial statements themselves is my main priority. What effect does this item have on the financials, and are we happy with the treatment that the client has given it? Our event after balance sheet date very specifically relates to IS-10. My concern here was whether or not students were able to identify specific accounting standard treatment and whether or not they correctly identified the risk. In this case, IS-10 very clearly separates the possibility. Either you have an adjusting event or a non-adjusting event. In the adjusting event, you'd need to have the incident occurring at or before year-end, and the information received after year-end gives clarity to something that was outstanding at year-end. In that case, you could adjust. In this case, clearly the incident did not take place before year-end, and therefore it could only ever be a non-adjusting item. And that non-adjusting item then, therefore, there will never be a journal that's passed for it, which means that his treatment is completely incorrect. The only possibility would be if this item should be disclosed, and that's going to relate to the materiality of the item. I haven't given you materiality figures, so your consideration would have to be to compare the amounts written off against materiality, identify whether or not this item should be disclosed. Let's take a look. The incorrect accounting treatment relating to the event after reporting date may be misstating or may misstate the project. So I've very specifically given the accounting effect of this, and make sure that you relate this back to the effect on the financial statements. Roy's incorrect treatment of this event might indicate that he is unaware of the effect of these types of incidents. Therefore, there may be further incidents which haven't been disclosed. There was no information in the question that led you to believe that this has taken place. Here is purely a case of common sense, and it's something we should keep in mind. Any items or information that is negative is more likely to be left off of your client's information. Therefore, negative information, in a lot of cases, we're sitting with the issue of completeness. The problem with completeness is that there is generally nothing to indicate that something has been left off. You have to go and look for it. Very seldom can you identify completeness issues by items that have cropped up. What we're looking at is the fact that the client clearly doesn't know what he's doing, on top of the fact that there's a very good possibility that this has a negative impact on their information, which means there's naturally a motive for them to leave it off. So be aware in future when you're dealing with clients' unawareness or their lack of awareness and the fact that there is negative information, completeness issues can crop up. There is a risk that the damage caused by the fire spread further than has been disclosed to us, which might impact more items or more values than has been recognized and disclosed, obviously. Inquire of the foreman the exact date of the fire and obtain supporting documentation. We need to identify whether or not the details we have are actually correct, so we inquire and we get the documentation that we need. Request Roy to adjust the account. Again, I have already stated what he has done with this. A lot of students look at this and say there's a possibility it might be incorrect. It clearly is incorrect. The details given state that the information has been dealt with inaccurately. Therefore, your procedure is going to tell him this needs to be adjusted. Consider the materiality of the amount in order to decide whether the disclosure may need to be adjusted. Inquire of Roy and the foreman whether there are any other events. There's not much else we can do in terms of completeness here, and request him to include in a management representation letter incidents, the details surrounding this incident. I just want to clarify when management representation letters should and shouldn't be used. It's a very popular procedure for students to use. We generally throw it in everywhere just in case there's a mark. I just want to clarify where we use it the most. Management representation letters are generally used in areas where there is quite a lot of uncertainty. The reason for this is because there is a lack of evidence. In areas that we're auditing, there are certain things that we know we'll never really be able to get the evidence that we absolutely want. Hard and fast, black and white evidence about the accuracy of something. Estimates, for example, completeness, for example, we'll never really know if they're 100% accurate or not. In these cases, sometimes the best we can do to close off our evidence is to ask management to put in writing that they're happy with what they've done, that they're happy that they've taken everything into account and they've done everything they possibly can to ensure the accuracy of those items. So in areas where you as an auditor expect that you will never really get the evidence you you need, you can close off the rest of that evidence by obtaining management representation. You would not need to get management representation about recalculating an item because you can do it yourself and identify some very specific evidence about the accuracy of that. So management representation letters, generally use them where you're expecting that you will never get complete, sufficient, appropriate evidence the way you would like to.